Hello, my name is Douglas Arner, and I'm a professor at the University of Hong Kong. I've been asked to speak a little bit about China's digital currency central bank payment system structure today. But first, I would like to say thank you to OMFIF and the membership for the invitation to join you all today. And also, congratulations to OMFIF's DMI, Digital Monetary Institute, on this inaugural symposium, which I think you all agree is a fantastic opportunity to learn about the big trends that we're seeing not only in central bank digital currencies, but in digital assets more generally. Now, in order to look into the topic a little bit more in depth, and I'd look at what I'm going to talk about today. It's based on a series of papers from my team looking at central bank digital currencies, looking at stable coins, looking at COVID-19 and its impact, and looking at crypto assets. And I think the key aspect here is that when we think about what is happening with central bank digital currencies, with payment systems, with digital assets, and I think if we're thinking about what is happening today, I think a starting point is that over the past 30 years or so, we have seen a technological revolution in monetary and payment systems. And this comes from both centralized systems, so a mass trend across the world towards the development and implementation of RTGS systems in the 1990s and the beginning of the 2000s. From around 2007, an explosion in the development of mobile money, starting with M-Pesa in Kenya and East Africa, but of course taken to its logical extent with Alipay and WeChat Pay in China, and similar systems expanded around the world. Of course, the development of Bitcoin in 2009 and experiments with blockchain technology following that, and most recently, the evolution of cryptocurrencies, of modern stablecoins, and of things like central bank digital currencies. And I think the starting point when we are looking at understanding what we are seeing in China and elsewhere today is to realize that money, payments, and finance tend to take place at the technological horizon. And what we've been seeing is the technological horizon changing. RTGS, mobile money, fast payment systems, Bitcoin, all of these are examples of that. And I think if we think about this period from 2014 to 2019, major central banks around the world often looking at and experimenting with a variety of pilots and proofs of concept involving blockchain and payments. But in almost every case, concluding that while interesting, the technology was not yet ripe for full-scale central bank adoption. That, in many ways, central bank centralized systems provided faster, more secure frameworks than could be provided by the decentralized system. And China's central bank, the People's Bank of China, had largely reached similar sorts of conclusions. But from the standpoint of the history of global monetary affairs, and certainly from the standpoint of monetary history in China, the launch, the announcement by Facebook of its proposal to create the world's first global stablecoin, Libra, a sort of private sector created cryptocurrency that could serve at the basis of a global electronic payment system running on Facebook Pay, WhatsApp Pay, but also external systems. And if we think of original members of that consortium, they included a range of both traditional payments providers as well as new entrants of various forms. And so the idea was that Libra could provide a private alternative issued by a major global technology company in consortium with other providers of a private monetary instrument. And this is something that, not surprisingly, central banks all across the world reacted quite strongly to. And we see a parallel series of efforts from mid-2019 right up to the present, from the G20, the G7, the FSB, and others, to build a regulatory framework not only for Libra, now called Diem, but also for other global stablecoins and stablecoins that may come along. But we also see, particularly in the context of China, that because of the view of not wanting any non-state, non-sovereign, non-domestic challengers to the sovereign currency, a decision to accelerate efforts from the standpoint of developing its own central bank digital currency. And we see an announcement of that in the second half of 2019, a few months after the announcement of Libra. We see the announcement about DCEP, the Digital Currency Electronic Payment System, China's project to create a central bank digital currency, and the beginnings of an ongoing project of piloting, of testing that currency. So I think many of us are expecting that in the run-up to the Beijing Olympics in 2022, we're likely to have large-scale national trials, including for foreign visitors, and that may well be the final stage before launch. And what this means is that China is likely to be the first major economy to launch a central bank digital currency. Now, China has not been the first country to launch a central bank digital currency. You've already heard from the Bahamas talking about the sand dollar, Cambodia with its Project Bakong, and some others perhaps may launch before. But from the standpoint of major economies, major currencies, China is almost certainly going to be the first. From the standpoint of DCEP, the COVID-19 experience has driven forward efforts. But it's also the case that if we look around the world, the combination of Libra with DCEP and COVID-19 has pretty dramatically accelerated efforts in looking at central bank digital currencies around the world. And I think if we think about this, this is only logical when we think about the traditional roles and functions of central banks and the involvement in central banks in technology of both money and payments. And when we're thinking about DCEP, I think it's very important to look at this idea of design and structure, that there are a variety of ways in which CBDCs can be designed. Some are payment systems, some are largely monetary systems, some are public, some are public-private structures. The big divide is between account-based systems and token-based systems, with or without the involvement of blockchain. And in fact, most central bank structures do not involve blockchain in the standpoint of distributed permissionless systems. Are they retail? Are they wholesale? Are they limited from the standpoint of domestic and foreign structures? And if we look at DCEP in China, we can see this primarily as a monetary instrument meant to replace M0, eventually replacing cash from the standpoint of the entire economy. It is a purely public provision of the monetary instrument, but the payments rails for that monetary instrument will be provided both by the private sector, existing providers like the banks or like Tencent, Ant, as well as China UnionPay will all use this as the basis of their system. But it also provides, in certain circumstances, the ability to get wallets directly from the central bank. It's largely a token-based system, centralized across the central bank, not designed to compete with the private sector, and designed initially to focus on domestic use. Now, what is the rationale for this? And if we think about, I should mention one other thing. One other aspect is that from the standpoint of privacy, DCEP is designed to collect information, and that information will not be usable by private sector participants, but it will be accessible by the central bank and the government for a variety of different purposes. Now, what is driving this? What is really driving this are a range of different issues: monetary policy, financial crime, the idea that one can replace cash with a digital instrument which will enable perfect solutions to financial crime problems, collecting data on a variety of social issues, and the ability to use smart contracts, programmable money, to deliver money in the way that is most effective from the standpoint of dealing with a range of social issues. Technology and innovation. If we think of one aspect of blockchain, blockchain is a national strategic priority for China. And from the standpoint of that priority, blockchain systems need trustworthy monetary instruments to embed in those blockchain environments. And Bitcoin and other cryptocurrencies so far have largely been unsuccessful. A variety of stable coins linked to fiat currencies have emerged, but the reality is that a central bank digital currency is probably the best way of solving this problem and providing the public good of a robust monetary instrument in a blockchain environment to support development. From the standpoint of China, financial inclusion is very, very important. We think about Alipay, WeChat Pay, each with around 1 billion users. But of course, China is a country of 1.4 billion people, and that leaves a couple of 100 million people that are outside of the existing systems. And this is a way to get systems to them. It's also very important from the standpoint of serving as a backup to existing frameworks. And as we go forward, while it wasn't part of the main design initially, the main design initially was focused domestically, including on foreign use domestically, we are now seeing China once again looking at issues of RMB internationalization. And of course, as we think about RMB internationalization, one can think about how DCEP and the e-CNY could be used in the context of those systems. And in addition to the domestic pilots, we're seeing a range of cross-border pilots, particularly in Hong Kong, but involving Thailand and the UAE. And I think in addition to the domestic rollout, we will see a range of continuing experiments with internationalization and cross-border use of the RMB. But very importantly, and this is my final point, very importantly, at this stage, in fact, DCEP provides a better solution to controlling capital movements in and out. So if one is thinking about free movement of capital, in fact, the DCEP system is not necessarily targeting that. If anything, it provides a better mechanism to monitor flows in and out, which could be a precursor to liberalization, but definitely not necessarily. Looking forward, from the standpoint of China, we can see this as an important technology and important development, not only in monetary and financial aspects, but wider economic and social and even innovation aspects. From the standpoint of the rest of the world, given that China today is, for the largest number of countries in the world, their major trading partner, often on a bilateral basis, the way in which China handles payments in and out of its economy is very important. And the development, first, of China's central bank digital currency means that everyone else dealing with China will have to come to terms with that. And that is driving other countries, particularly major economies, to think about their own solutions, which will likewise have major implications across the coming decade. Thank you all very much.